Everybody, man, we got a busy day today on Wall Street. Welcome to the morning show. It's the best morning show in finance on Stock Market TV. I'm Spencer Israel. I've got Steve Strazza, and today, special guest host Ian Cully, head of FIC at All Star Charts, will be stepping in to the gauntlet. So we'll be talking a lot of FIC, a lot of bonds, crypto. It's Crypto Friday after all. We'll be talking commodities, currencies, all that good stuff. We have a jobs number out just now. We'll talk about that with our first guest of the day, John Netto. That'll be in around 8:45 or so. We have a few earnings to discuss as well. Kimmy Circle will stop by, and our featured guest today, Jason Perz from Against All Odds Research at 9 a.m. So about a half hour from now. That's the rundown. Drop a like if you're watching on YouTube. Let's roll that intro and bring Strazza and Ian Cully on the morning show. What's up, guys?
How's it going?
Good morning.
So we're hijacking the Crypto Friday installment of our morning show this week, and we're basically turning it into Commodities Friday. We have a special guest host here, Ian Cully, who runs our FIC analysis at All Star Charts. What's up, Ian?
What's happening? Good morning, guys.
You
Thanks for having me.
You've been on before.
I have, yeah, but I haven't been on this early in the morning. It's
more like an hour and a half this time, not 10 minutes.
We appreciate your sacrifice, Ian. So we did just get the jobs number. I can give you guys the numbers now, and then we can wait for John to come on and break it down, or we can just wait for John to come on in about 10 minutes. Your call.
Just give us the print.
Yeah. So then, okay, I'll give you the number. So non-farm payrolls for May came in, way above the estimate. 339,000 jobs added last month. The street was looking for about 180. So huge beat on that number. Unemployment rate, 3.7% versus a 3.5% estimate and a 3.4% reading in April. So we did creep up the last month. Not sure how that jives. More jobs added and yet unemployment higher. Go figure. Average hourly earnings for the month came in a little bit below estimates there. Okay, that's a weird report.
The way that, and we'll talk more about it with Netto, is if there's more layoffs than new job hirings, unemployment rate still rises, right? And
sure.
Like we were reading yesterday, highest layoff number from the Challenger report in something like 8 years.
Yeah.
We'll ask John about that. But it seems like, overwhelmingly positive on the, payrolls number, which is good. And then, like you said, it's slight uptick in the unemployment rate. And then average hourly earnings, which people are watching pretty closely these days, came in right at expectations on both a month-over-month and year-over-year basis. So,
all right, great. Should we go into should we go into state of the markets? We have some slides.
We sure do.
All right.
All right, Steve. What's the state of the markets?
Yes, let's do this. State of the markets. Listen, we talk a lot about 5 or 10 stocks driving all of the gains at the index level. If that was the case, the equal weight NASDAQ 100 wouldn't be up 25% from its lows last fall and basically resolving higher from this base, right? This is mathematically telling us that it can't be just 5 or 10 stocks. There's 100 stocks in this index. They're all equally weighted. It relieves us from that market cap drag effect, right, of the biggest names doing most of the work, and it still looks really good. What we're going to do right now is look through a bunch of bases in the tech growth space and talk about what these bases mean for the bases at the major index level. So next chart, equal weight tech, same concept, right? Very similar, a lot of overlapping components to the equal weight NASDAQ here. But we talk a lot about XLK and large cap tech, and we'll get to that chart towards the end of this segment. But it's really constructive to see the equal weight indexes printing similar reversal patterns and also looking to resolve higher. We're going to talk about some of the things that we look for in these bases, right? Not all bases are created equal. Some are better than others. Let's look at just some of the characteristics in this base right here. We got the 200-day moving average in gray here, flattened, curling higher, below price. We're taking out those pivot highs from this year, already have. Got a quick little retest there too, last week or the week before. Above the August highs, which you see there at the second red arrow. Momentum is in a bullish regime, not getting oversold in some time now. Looks like since last fall, and then consistently hitting overbought, right? All characteristics of uptrends. This is a great base. We really like it a lot, but it's kind of already moved on us, right? So not a vehicle that we'd look to invest in or express a bullish thesis on tech through. Next, we have expanded software. This one's a little bit closer. This is IGV. Still, this one is cap weighted, but we're above those August highs. You see the red arrow there. We're above the flattened and slightly now sloping higher 200-day moving average. Momentum looks great in this one. Kind of checks all the boxes for us, right? And what we do here is basically we could create a checklist, Ian, right, in our minds where we say, okay, if tech or XLK or equal weight tech or NASDAQ are going to hold their base breakouts, then you got to see the subgroups and the industry indexes that support those indexes also breaking out and holding, right? And that would be things like internet, software, semiconductors. That's why we're looking at these charts now. So internet, another one, looks really good and really clean here at this like 154 level. Again, you see the momentum pinging into overbought readings already twice this year. Getting that overbought reading on these new highs just this week, confirming that this is a valid resolution, right? So as long as we're above those August highs, I do like this one as a vehicle. It's pretty actionable right here, right now. Cloud computing, not as good, right? And not as clean. We do have the year-to-date highs where we can, define an entry at right around 70. But look at how this 200-day moving average is still sloping lower. That just means the base is it has spent less time, in this rounding bottom formation, and the odds that you get a valid resolution, the odds of a valid resolution kind of fall as the base is shorter and shorter, right? The longer the base is, I think the better the chances are that you do get that resolution. So something like this one, maybe a little bit early, but momentum really, does look promising down here.
Watching those August pivot highs, right? Still below the August pivot highs there.
Yeah, the August pivot highs are just kind of, they're still, 10 points higher from current prices. So I like something like internet, right, where I got the year-to-date highs, I got the August highs. They're so clean. It's right there. The clean bases are really the most investable bases. ARC F, you do want to see, these spec tech indexes start to play catch up here. I wanted to bring this one along because you could see that it's very much on its way, right? It looks a lot like internet did just last month. Okay, so maybe it just continues climbing up the right-hand side of this base. That would be a major development if we could get some of these ARC funds breaking out of bases, right? Because that would speak to risk appetite in a way. IPO is another one, but look, maybe needs more time, kind of similar to Cloud, right? With that 200-day moving average.
Looks a lot like Cloud.
Yeah. So if the majority of these bases are going to hold, and really it's internet, it's semis, it's software, right? Those are the major subgroups. If those bases hold, this thing sure is going to hold. This is large cap tech being driven by, the strongest stocks in the world and the largest stocks in the world, 5% away from all-time high. All right, you got that overbought momentum reading this week, confirming those new highs. Let's contrast that with something like communications. Also really nice base. Probably spent a little bit less time basing. And the drawdown from 21, 22 was far more severe. But look, this is nice. Nice little inverted head and shoulders pattern. Slightly different momentum character or momentum profile here, right? We do want that overbought reading like yesterday to confirm this breakout. But we wouldn't look at something like that and shy away from it too much, right? A lot of times momentum has to catch up to price, and that's probably what's happening here. So if these bases are all going to hold, tech's going to break out, the NASDAQ 100, next chart, is going to hold this base breakout. Yep, beautiful. So that's NASDAQ 100 futures. And you saw that, great little retest of the August highs last week, resuming higher now. And then the S&P 500. Why wouldn't the S&P 500 look at the same as these bases very soon, right? Yeah. Communications, tech, those are the biggest stocks. That's what's driving the gains in the NASDAQ. It's also what's driving the gains in the S&P 500. 4,200 is that level. All these bases that we just went through are going to hold. think that's going to hold too. And then what do? How do we express a bullish thesis on the market? We buy the bases that look like these, right? An individual name showing strength. I wanted to bring along a new one today. We're talking about another, bullish base breakout every day, but I don't think we've talked about this one yet. So 10X Genomics. This is a genomics name. It's in the ARK Genomics Fund, ARK-G. And all the characteristics we're looking for, right? You got the 200-day moving average. It's had plenty of time to flatten out and curl higher below price. Really clean base breakout level there. We got 1, 2, 3 touches from last year, another couple touches from this year, and we're just pinged right at that level, high and tight right now. About 55 is the level here. We're above there. Path of least resistance is higher. New uptrend is underway. So we want to play these base breakouts through the strongest components beneath the surface, right? Not particularly at the index level, and there's a lot of them. So I just wanted to bring along an example of that today. How'd I do, Ian?
I love it. This might be my favorite chart, just because of how tight that consolidation is right at this key area of resistance. I mean, if and when it resolves higher, I think it's going to be explosive.
I mean, I've been watching this one for a while, right? And I know that you often pay attention to stuff like this. Do you look at this as a short-term continuation pattern at the upper bounds of the base? And is it taking too long? If so, or is this still just in base building mode? And that's okay that we kind of have this prolonged sideways here. I know that when you look at a bull flag and it takes too long to resolve higher, you start to question if it's a bull flag. You look at something like this or no?
No, because I would have to err on your latter breakdown. This is we're still basing here.
It's because there's no flagpole, really. Right?
Yeah, I look at this and I see the bulls. I see demand continuing to absorb that overhead supply that's really well defined.
I agree with
the fact that it's so tight speaks to that bid that bulls continue to step in and support price. So, and it's so tight, when you see this could launch. I see this as a launching pattern for the completion of this much larger, almost year-long basing formation. Yeah. And the 200-day moving average is starting to slope higher. So I really like this chart a lot.
You said the key word there. These are launch pads, right?
Yeah.
Because these are the sideways patterns that precede new uptrends. So they literally are, upon completion, they do act as launch pads. We expect that automatic reaction or leg higher coming out of these bases. Bollinger Bands. Yeah. All right. So we're talking about Bollinger Bands with Jason in 17 minutes here. So
this reminds me of why not just trade what's working? Why not just trade what's in front of you? And then there's a lot of discussion out there right now about the lack of participation, and it's all focused on tech or it's all large cap. I mean, if that's where the ball is, if that's where momentum is, and that's what's working, just follow the ball.
And we looked at some of these candles from earlier this week, and we thought, got to cool off here, right? And look at the way these things have just been so resilient. There's just a relentless bid for these stocks right now. The big cap tech stocks didn't get much of a correction this week, right? We got that little retest last week, a little give back on, Tuesday and Wednesday of this week. But, these indexes just keep cruising to new highs. And I think yesterday too, the action from ARK and speculative tech was really constructive, right? Because we do need to see one thing for big cap tech and the best tech stocks to be rocking, but we want to see that strength and participation move down the cap scale and out on the risk curve, right? So we want those more speculative growthy names to also participate. ARK is the best barometer or index to kind of represent that theme. And I think it took out a really big level yesterday.
Yeah, it looks good.
All right. Can we bring on John Netto? We have him here.
Please.
All right. John Netto, author of the Global Macro Edge, here to break down the jobs report for us. Let's see if I can get him here. John, you with us?
I am. Can you hear me?
Yes, we hear you. Good morning.
Good morning, sir. Good morning, Spencer.
Okay. Break this down for us. It appears to have been on the surface a good report, but I never quite know if good news is bad news or good news is good news. So what do you got?
We have a little bit of a mixed report, actually. So the headline, you're right, was good with some really strong revisions. but this is no longer, the Fed is obviously, as inflation, in particular wage inflation, has become a factor, has become a little more compartmentalized in terms of where they're focused on. And so as strong as the headline number was, which it came in at I'm gonna get my thing. It came in close to 100,000 beat. We also had strong backward revisions. The unemployment rate survey, which was at 3.5%, came in at 3.7%. Now those are part of two different surveys. There's the establishment survey, which produces the headlines jobs number, and then the household survey, which comes up with the unemployment rate. So that's quite a big disparity in that regard. And then lastly, of course, is the average hourly earnings, which on a year-over-year basis, because of a backward monthly revision, came in modestly lower. So you have a really outsized weakening unemployment rate, meaning it's going higher, which is a more bearish or really dovish phenomenon. You have a very strong headline number, which is obviously a more hawkish phenomenon. And that chop bifurcation is why the S&P is largely unchanged. We went into the number at 42.45 on the futures. We're now at 42.49, which shows you that there's just not much reaction to the S&P. Gold's a little bit lower on the headline, and fixed income's a little bit down. But I'm not sure some of that is just a function of what's been a very strong week for fixed income. We've seen bond yields, drop 20 basis points, and we've seen gold put in a nice bounce. So I think some of this is a combination of a mixed non-farm payroll number combined with some of it's just a function of some position squaring after a rally in fixed income and gold.
Talk to us about the read on average hourly earnings, John, and what that means for inflation, how the Fed kind of pays attention to that and why.
Sure, great question. So wage inflation, so there's a couple of factors in inflation in different parts can be more sticky or less sticky. Okay, I think we could all agree that when you look at something like food and energy prices, there's more volatility there, so they can go up. We've seen the sell-off in crude in the last 4 to 6 weeks. Take note, but that volatility is more elastic, or that inflation becomes more elastic. Whereas if you give someone a pay raise, are you going to go to them a month later and say, yeah, I got to lower your pay now? Yeah. Or 2 months later, yeah, I'm going to raise your pay and then I'm going to lower your pay. Like it doesn't. So there's a sticky factor there, and things like rent, which is measured in the CPI through what's called the owner equivalent rent component, and also obviously average hourly earnings, which we get here, and also the economic employers cost index, which comes out quarterly. Those things are more sticky, and that's why the Fed gives that, because that's less likely to abate if they want to reach their price stability target.
So the wage inflation is still kind of showing that we're still moving higher, or it's come in enough that the Fed might be comfortable that they could stop hiking?
So there's great question. There's two components to that. One is where it's at on an absolute basis, and then the other is what we're seeing in terms of a rate of change. Like what is the velocity of that change, right? So right now, the rate of change of rate hikes is now slowed, or actually pause/slowed. So that rate of change is constructive for the Fed, but the absolute levels are still higher than where the Fed wants them. It's seen at 4.5% to 5% wage gains on an annual basis. But at least if the velocity of those increases has subdued and is now slowing, that's something the Fed will feel that they've done constructive. Also, given the fact that there is still a lot of hiking in the pipeline that has to manifest itself. So all in all, if you see decelerating wage growth combined with the lag effect of hikes, that's something the Fed will sort of bet on the come, if you will, to take a craps analogy from here in Las Vegas, that okay, this is probably there's more of this to come.
Yeah, that makes sense. You got anything, Ian?
Crude oil up 2.5%.
Yeah, what's kind of the early reaction? It's muted, John. Not seeing much.
Well, like I said, I think that this is largely, this gives kind of everybody a little bit of what they want. You have strong wage growth, or you just have strong job growth, which people like. You have wage growth that's contained, and you have the unemployment rate, which is abating. So the idea that the Fed is going to move on the June meeting outside of a really strong CPI number, which we get in 12 days from now, you're not looking at, it's going to be really tough for the Fed to at least not pause this June meeting. I think that's, when we walk away from this in an hour to 2 hours from now, that's kind of what people will take away from this. But net, this is nothing that's going to move the needle too much, which is why I think the price action we are getting is more indicative of the flows from the last 3 to 5 days, and less about, oh my God, this number is causing me to reshift my portfolio risk.
So we'll probably look at Fed fund futures later and say, okay, the odds of a hike this summer have really come in.
They've somewhat come in before today. They're a little higher right now of a June hike than they were before the day began, but not materially to where this event's necessarily caused that. So I think the final nail in the coffin in terms of a pause or not will be that CPI number. But the Fed fund futures today are not, really jumping off the chart like they've been a major reprice. But the Fed fund futures, looking for the July meeting and the September meeting, have ticked up that there's a chance the Fed could hike at those meetings.
And really between now and the next Fed decision, it's just the CPI report.
It's really the CPI. Now, the Fed governors, we had two Fed governors talk yesterday, and they emphasized the term pause and their verbiage, which I think the market, viewed constructively in terms of they really are going to pause. So we could get a few more we will get a few more Fed speakers that talk between now and the blackout period. But it would take a pretty outsized CPI, I think, to get the Fed off of not off their pause language for the June meeting.
Historically speaking, isn't it unusual? Some of them have been talking about, oh, maybe it's not really a pause, but we'll skip a meeting or two. Have we ever seen anything like that throughout history where they just kind of take a break and then go back and keep hiking?
It tends to go the other way. It's after the first hike, or after the last hike, that within 6 months on average, they're actually doing the first cut again. Yeah. And so we are in unmarked territory. I don't want to say it's never happened because I'm sure it has, but off the top of my head, the analogs and why we saw so much cutting priced into, at least 4, 5, 6 weeks ago by the end of this year, and even by the early next year, where there was, the market price in three cuts, 4 cuts by the end of next year. Yeah, because that is the analog, but that's come off quite a bit, or that sort of reset quite a bit. But it's more the analog to cut after they indicate the final hike, much less than to resume. But this could be different.
Yeah. All right. So it might be a little strange if that's the route.
Yep. Yeah, atypical for sure.
All right, John Netto, I know it's very early for you. We appreciate you coming on. John Netto is the author of The Global Macro Edge, and he trades these events with regularity. John, we'll have you back next time around.
Thanks a lot, Spencer. Talk to you guys. You guys have a great weekend. Peace.
You too. Yeah, I mean, he's West Coast time, waking up at like 5 a.m. for this number. So
good, man. Knows his stuff. Love talking.
I appreciate that. Before we move on, there was a question in the chat. Can we go back to that 10x chart real fast? And
let's talk about potential momentum divergence. Keyword potential momentum divergence. So you're not wrong. Throw up the question in the chat. I'm missing it here. Isn't RSI showing a divergent pattern to price? So sure, what Steven's alluding to here is we have incremental highs in price. If you look at the last 2 red arrows on the right-hand side of this chart, price is making very slightly higher highs here. And then if you look at momentum in the lower pane, that jives with it, momentum is making a lower high and not even getting overbought. You want to give price time to catch up. And oftentimes you want to give momentum time to catch up to price. And that's what's going on here, right? The price action has been so dead here. Ian was just talking about how tight and choppy it's been for months now. If we do eventually get a resolution, then I'll look to it a little bit more, seriously and say, I want to see an overbought reading. And technically, yes, I want to see a higher high in that overbought reading, but it's really not the end of the world if you don't get it. I mean, Ian, do you want to add to that? You don't want to overthink these momentum divergences. You really don't.
No, I actually prefer to focus on bearish and bullish momentum regimes.
And explain that.
So a bullish momentum regime is followed once the 14-day or 14 period, or whatever period you're using for the relative strength index registers an overbought reading above 70.
Happened in October in this chart.
Exactly, and I think that's the bigger or that's my preferred take or read on momentum, is that we're seeing bulls take control of price of the market as it's potentially coming out of a basing formation. And we saw another overbought print more recently after that October. So bulls are in control. It's in a bullish momentum regime. And like you said, price is so tight. We would expect to see, the RSI just chop sideways.
It's dead, right? We want to see, for uptrends, we want to see momentum get overbought on rallies and not get oversold on corrections. And that's all that's going on here, right? Since October of last year, overbought on rallies, not even close to oversold, not even breaking 50 on corrections or, the sideways price action here. That's really constructive. If and when we break out and price goes, then I'm going to look back to this, momentum pane down the lower pane here and say, let's get overbought for confirmation. What I'm not going to say is, oh, it didn't take out the high from earlier this year and make a higher high in momentum. I'll be okay with just overbought. Would you agree with that?
Absolutely. And I'm not looking for a bearish momentum divergence during a basing formation. I'm looking for a bearish momentum divergence after price is ripped
in the
20 or 30%. I'm looking to see that rally, that momentum in the uptrend start to wane. Yep. That's where you see, that's where that particular type of read on momentum is far more useful.
Yeah, you're absolutely right. Just like we would look for that bullish divergence, which we have drawn here during the bottoming process.
Yeah, absolutely.
All right, I hope that answers that, Stephen. Why is SoFi up 4% pre-market? I don't know. SoFi's been up a lot lately.
Right? You could ask that question any day of the last week.
I think I was telling you, Spencer, I was on the Twitter Spaces with Liz Young. She's awesome. She's the director of research at SoFi. And I felt so bad for her because, I'm sure it was agreed upon and scheduled well in advance, but SoFi was up, like 20, 25% the day that she was on the Spaces. And all anybody wanted to ask about was SoFi, and obviously she couldn't speak to it. But, bad luck. But that was fun.
Yeah. Okay, so we're going to have Jason Perz on here in like a couple of minutes. Is it worth it to do any earnings, or you want to just punt on that until after our guest? I say we punt. I say we punt.
Yeah. Why rush it, right? We'll have time later.
Exactly. We have the whole rest of the hour here. Actually, since Jason is here backstage, Jason, why don't you give me a thumbs up if you're ready? If you're ready, we could just go ahead and bring
Jason's
you on
awesome.
here.
I know he's ready.
He said 1 minute. He's not. He's explicitly not ready. All right, so that's cool. In the meantime, it is Friday. Usually on Fridays we do some crypto. Do we have any crypto charts ready or no?
No, I can give you a crypto chart. Give me.
I think there's a couple crypto charts in the deck.
Yeah, I thought I saw one or two. There we go.
I got one I want to talk about. Ian, start talking about crypto. Give me 1 minute here.
If I want anything,
throw up the crypto charts.
Yeah, we got Bitcoin up right now. Okay.
We got Bitcoin up. What are we looking at? We're looking at the number of days above the 200-day moving average. So that, and what's also what I not only just 141 days that price is trading above that 200-day, but you also see the 200-day is starting to slope upwards.
Yep.
I think that's a big deal.
In fact, Ian, if we were to zoom in on a chart of Bitcoin, would it not look a lot like those bases that I was just talking about? That's not how I would draw it. I would draw it at the August highs and zoom in more. But, there's certainly overhead supply there at 30. Here's what I need to see from crypto. Throw up chart 2. This is our custom altcoin index. This is the 10 largest cryptocurrencies outside of Bitcoin. This base has to go.
Yeah.
This is like ARK, right?
Yeah.
When we look at XLK and in the NASDAQ and we say, oh, look at this base, it's completed, that's great. And then we say, but we need the speculative tech and speculative growth to also complete the base. And then we look to ARK for that. This is the same thing. We'll look at Bitcoin and say, oh, Bitcoin, that's great. The mega caps are going in the space. But now we need the more speculative stuff, the altcoin index, to also go and confirm that strength. I got to see this base break out. I'll feel a whole lot better about Bitcoin heading back to those former all-time highs if and when that happens. And I think it's coming. But again, time. Look at this 200-day. It's close. It's close. I think it happens soon.
It's pretty flat right now. Pretty.
Yeah, I mean, look, this 1, 2, 3 tests of this base breakout level, keeps making higher lows, hitting that level more and more often, I think it's go time.
More time a level is tested.
That's it. That's what they say, right?
Yeah.
All right.
There would be price memory even in a custom index.
Funny how that works.
Let's bring on our feature guest today, Jason Perz from Against All Odds Research. He says he's ready to go. So let's get him on the show.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Jason,
Hey guys, how you doing?
My man.
it's happening.
Great to see everybody today.
So normally Jason has us on his shows the past few years now. Jason's been hooking us up on Against All Odds, right? Yeah.
Against All Odds Research.
Ian's been on a handful of times. I've been on once or twice. Now we're returning the favor. We got Jason on our show. And I have a feeling, everybody, if you like Jason, let us know, because I have a feeling he's going to be back more and more. Maybe some guest host slots in the future in July, right, Ian?
I think that sounds good to me.
Oh, I'd love to. I always love talking to you guys. It's an absolute blast. That's why I bring you guys on so much, because I'm like, who am I else going to talk to who just looks at price and is like, let's get the price action. Let's look at the real things of what's happening in the market. And let's not make up crazy stuff. Let's just be real traders.
We have to set timers when we do interviews with Jason. Otherwise, we'll just talk for 3 hours.
Yeah, that's how it usually goes.
So just for some context, we typically do like a crypto themed show on Fridays. It's just like an internal thing that we do. We love.
Oh, I love it.
Fridays. But today we have you here, so we figured it'd be more like a commodities Friday. If you do want to do any crypto, we'll go crazy. We'll get into it. But let's dive right into the charts you sent, because you sent over some really good stuff. Anywhere in particular that you want to start, or should I just?
Oh no, I mean we could go in order. I try to kind of make it in order a little bit. That's a little bit out of order, just because that's how my brain is. But I'll see something in the stock space and be like, oh, it's obviously has something to do with this thing over. It doesn't make sense to most people, but I'll link it together.
So, where better to start than the dollar, right? Can we tell up Fonz that chart with the bullish bearish implications of the dollar? This looks exactly like the first chart that Jason sent me. Jason, I don't think it's any coincidence that the first chart in the long list of charts that you sent us is the dollar. Why is that?
Straight up, the dollar is always the most important piece of any macro model. If I'm looking for what I'm going to be doing the next quarter, the next year, the next 5 years, I'm always going to look at the dollar first. Right now, to me, I'm kind of seeing like a similar pattern that seems to happen when the dollar tops. You see this starting to form lower highs. You call that a fallen angel pattern. Where you basically keep hitting these bump ups and then coming back down. It looks like that was the reversal the other day. I think yesterday was finally the one that kind of is going to pull it lower. Great example of that, speaking of Bitcoin, since you do have a Bitcoin theme, is in Bitcoin in 2017. I think that was the one in 2019. It started when these topped and started making lower highs into 2018 and into 2020. This is a fallen angel pattern, like the best fallen angel pattern you'll ever see in your life, and to me, looking at the dollar, I'm starting to see the similar thing form. I really would love to see it start breaking down past that 100 level. That would start to tell me a lot, but yeah, I'm really, the dollar looks like it's going to turn right here. Absolutely. For me, I think it topped in October, and then we'll see where it goes from here.
So the fallen angel pattern, you need context, right? It's the fact that it came off those highs from last fall, fell the way it did, and now is getting these kind of bounces. Like what is?
So fallen angel pattern basically means that once we hit that high, we tried to get back up to that high, like the last two times. So we tried to get back up to that high. We didn't come anywhere near 110, 112, nowhere near it. We barely got to 105. Came back down, tried to reverse again, hit that same nearly similar level, then came right back down all over again. So seeing that both of those aren't making new highs and not taking out the old high, even the recent one that hit around 105, we're not getting above there. To me, tells me that I think this thing's out of gas. most of the time that's how these things look. And if we really start to break down, I would be very bearish on the dollar here.
So really, it's the pivot lows you're watching. 101.
101 would be what I'm watching more than anything. But at the same time, I'm still just kind of like, yeah, these highs are kind of telling me this is over. It doesn't mean it always, people are looking at it and going, okay, it must be a commodity cycle, or okay, it must be this cycle. It's all, the dollar can sometimes mean that just the euro's going up. The dollar can mean that the Aussie dollar is going up, in another time. But I think right now we're going to see a lot of flight to European currencies, possibly the yen. The Great British Pound has been stronger than just about every currency out there, so there's some really great currency trades setting up right now.
So it's kind of like, a lower dollar doesn't automatically mean commodities and stocks are going to rip. It's just definitely not a bad thing for risk assets. How they're going to perform with that headwind removed or maybe new tailwind in place of a falling dollar, we never exactly know how, right?
Yeah, and I also see that money's kind of going out of the United States right now. It's kind of the trend has been money kind of going into global currency. Obviously tech here has been major and been running, but Germany has done really well. Most of Europe has done really well.
Are you just talking about fund flows?
Yeah.
When you say that,
I'm also talking about the price action. Mainly the price action more than anything is telling me that most of these are in uptrends. The price action for Europe, most of these are in uptrends. So when we're looking at that and going, okay, the dollar's coming off, Europe's starting to pick up. That's telling me that we could start to look for other areas outside of the U.S. to be major outperformers this year.
It's a great point, Jason, because we've been talking about breadth a lot this week and how it's not great in the U.S. We've got big cap tech and not much else at all. Overseas, that's not the case.
No.
Breadth continues to improve. More and more of these country ETFs are breaking out, making new highs. Things look great. And it's not a tech theme over there either. Beneath the surface, things look great too. Staples, industrials, healthcare stocks. There's a lot working. So, if you're not finding opportunities here, look there, right?
Yeah, and that's I think the thing that so many people get when they're looking at the stock market is, I think especially in the United States, we have I forget the exact number, but I know that we invest more in our own country than anybody in the world. Other people in other countries always are looking for other countries to invest in. We do not. And even with the advent of ETFs, mutual funds, all these things that can get your money into these other areas, people still don't do it much in the U.S. But I think to me, it's very important. It's not something that's, political, just think about it like you're protecting your money. You're always protecting your money. And if we're protecting our money, it's important to be able to put money into other areas that are outperforming.
You make a great point. Here's the problem with that. Not only do us crazy Americans have an extreme home country bias, right? But now we have the recency bias of the last more than 10 years that's the right way to do it, right?
Yes.
Like there's been like a positive feedback loop there where if you did have a crazy home country bias for the past decade, you outperformed. That was the right move, right? So that's going to be really hard, just like we talked about in 2020 and 2021, saying people don't want to buy commodities. That hasn't worked in too long. It's going to be a hard thing for people to wrap their heads around. Same thing with saying, oh, don't get out of the S&P, get out of the NASDAQ. Go buy the UK or Germany or Japan. What?
No, that's a great point. That is a fantastic point because that's where so many people get stuck in things. When bonds weren't working in 2018, nobody wanted to buy bonds at that point. Once again, we're kind of at that point again. And we're looking at commodities 2020, it hasn't worked in so long, and commodities always go down, don't invest in commodities. And then they're the greatest performing, commodities trade in many, many years. So, it's for traders, I think it's really important. Like if we're just looking at normal people, that's something different. But if we're looking at it as traders, we have to always be willing to go to those areas that are showing relative strength. That's the most important thing to me. If I'm not seeing relative strength in any outperformance, I don't want to be there. And the whole reason is if I'm just going to perform like the S&P, I might as well just put money into the S&P 500 and walk away and go to sleep. But if I'm trying to be a trader, I'm trying to outperform the market, I need to look at these things like commodities, bonds, other countries to find places to generate alpha to outperform.
So Jason, you just brought up bonds, which I think is really interesting. And you compared right now to 2018. So what are your thoughts on interest rates? What are your thoughts on the bond trade? Is this a time to step in and start adding bonds back to the portfolio?
I personally believe so. Once again, I'd like to see it clear these levels, right? We're all looking at that level. It's kind of made a triple top in that area on the TLTs. So if we're looking at TLT, which is the Treasury ETF, we're seeing that it's kind of at that triple top level. I'd like to see it break out over that. Once it breaks out over that, absolutely. So what I'm seeing there is, copper to gold ratio is a ratio I use a lot. I did send you guys a chart on that too. So the copper to gold ratio is also telling me that, gold is going to be the outperformer now. And if gold's the outperformer, then also, and outperformer compared to copper. So if gold's going to be the outperformer, bonds usually also lead that charge as well. So I'm kind of seeing that this is kind of all leading up to a bond trade really picking up here, being kind of a good area to invest in. And you guys know me. I was very like I run a trend model on bonds, and the one thing I always say is there is nothing that trends better than the 30-year bond. Nothing. And bonds have trended. They trended up and then they turned back down. You guys know I was short it forever. I was the only person still holding short for God knows how long. And it just kept falling and falling and falling. As it reversed, now we're getting buy signals the other direction. I do think that this could absolutely move the other way. I do think right here, most of the time I'm looking at the 2-year yield for hints on what the Fed's going to do. Now the 2-year yield is coming down. Now they're not making new highs. All these things aren't making new highs basically across the interest rate market. So I'm seeing that the Fed's going to pause at some point. Do I think they're going to come down? I'm not looking that far ahead. I'm just looking at, are they going to stop? Are interest rates themselves the one that they don't control? Are those going the other direction? That's true. So all those things kind of coming together and going, oh, well, we definitely have a setup here for bonds. Like we have a great setup for bonds. And then sometimes that's all you can really look for. Looking for a setup, finding the right one, being ready to take it, and also investing in the things that do well around that. Tech does well around that, gold does well around that, and so on. So as long as our portfolio is diversified and in these areas, we're going to outperform.
How much do you, I like what you said there, how much do you consider the price action in other long duration assets, tech, growth stocks? I'm talking about you. We're always overlaying a tech chart, whether it's a NASDAQ or XLK, with long-term bonds, right? And we've had a big divergence there really all year, where it's like bonds haven't broke out of that base yet. They're close. You look at something like tech and all those bases that have gone, and then think that works favorably for bonds and suggest that they do follow.
Yeah, so I do think that this is important. I think that intermarket analysis is never 100%. I've never been able to build models that have been 100% on intermarket analysis or even good, high probability models. And the reason is that they're always changing. Intermarket relationships are always changing. Think a couple years ago or last year, you had the yen falling off of a cliff when there was deflation. These things always change. But at the same time, they usually catch up to each other at some point. So, people are going, oh my gosh, where are bonds going? And then they show the jaws of the TLTs compared to the NASDAQ. And they go, why isn't this catching up to this one? Or why isn't gold, gold is caught up to this one, but it isn't as far back as the bonds and so on. It's just, these things go through changes, they go through phases. So tech will lead for a little bit, then gold might catch up, then bonds might catch up. This is how those usually work. So they're all going to take time to develop. And because it's a thing about coming up with a portfolio like this is if you have all these things in your portfolio, you're also looking at the fact that one or two of these things are going to start performing, then the next one will start performing. Some might not perform at all. But that diversification saves you and the risk management saves the rest of you.
Yeah, I think Ian has learned firsthand about some of these intermarket ratios. Like we used to rely on a lot for interest rates, stock market ratios, right, Ian?
Absolutely.
That worked great for years. And then all of a sudden this past cycle, they didn't work at all. And we could have done two things when that happened, right? We could have looked at it and said, oh, the intermarket ratio's got to be right. Rates got to, catch lower. Or you could look at it and say, maybe it's just breaking and dislocating, and we don't want to wait as much as we used to, right? Ian, do you want to?
And that's the approach we've taken, and it's worked in our favor. yesterday I wrote a post about just interest rates and the fact that when we step back and look at the structural trend, it's still higher. I mean, the 30-year yield looks almost identical to a chart of live cattle. You know, and you know, we got all the intermarket ratios, copper gold being one of them. We have the fact that just commodities overall look vulnerable. You know, cyclical assets, you know, cyclical stocks, value-oriented stocks have looked better. You know, all this evidence is pointing to lower yields, but when you step back and look at the charts, you know, the trend's still higher. But yeah, so, you know, you got to, you know, intermarket analysis is extremely important. Those ratios, I think, are extremely important. But like, you know, like you're saying, like Jason just mentioned, they sometimes they need time. These trades need time to develop. You know, gold needs time to catch up to tech. Bonds need time to catch up. And maybe tech catches down for a little bit. You know, it's not perfect. It's not like 100% perfect science.
Yeah, you never want to get too bogged down by that.
Yeah. Again, it gets back to trade what's in front of you. Trade what's working.
Yes, I mean, I think that the best thing that I've you know, and it takes time to learn that and really do that well. You know, like last year, for example, I was short the yen for most of the year, even though all of my macro models were telling me that was the wrong trade. You know, and sometimes
amazing trade.
Yeah,
amazing trade.
It's a great one, you know, and it worked really well. But it takes time to kind of learn that. You know, you hear that the old school turtle traders using nothing but, you know, 100-day highs and 50-day lows and vice versa for shorting and not looking at any other inputs. And like, to me, I was always like, maybe that's not exactly the correct way to do that. Maybe there's a better way. As time goes on, I'm like, you know, price action really dictates every move. You know, every single move is always dictated by price action. It's like, you know, people are going, there's a recession. It's the end of the world. You know, all these things are happening right now. The market's been going up. There's nothing to do. Like, you know, I have all these friends that talk to me all the time about it. And they're like, oh my God, you know, I can't believe you're bullish on anything. It's like, I don't know what to tell you. All the models are going up. And that's just the end of it. You know, that's exactly how it works. So as long as they're going up, that's just what we're going to do.
You know, the more I learn about technical analysis, the less I do.
Yep.
Every year that goes by, it's just simpler and simpler. So, Jason, before we let you go, it sounds like you're souring a bit on commodities. I know that's your thing. I see your ratio charts. I hear you. Not getting the alpha there that you got over the past few years. So what do you do? You're staying away? Are you still dabbling in stuff like whatever it is, live cattle and some of these softs that are still pockets of strength? Or do you just look elsewhere and now you're a growth stock investor?
So there's absolutely a lot of that. So, you know, the Nikkei, Europe, tech, and so on. You know, there's a lot of areas that I am long right now that are in the tech space. Gold, silver, you know, these are still commodities and they are still going well. But most of the time, the commodity cycle always cycles back and forth. Rates start to come down. Gold, silver starts to take over. Sugar's been strong. Live cattle's been strong. You know, there's certain areas that are starting to pick back up. You know, I'd stay away from energy personally. You know, there's nothing really to do there just yet. But all these other areas, there's trades kind of ticking up, you know, on the long side. Obviously, on the short side, there's trades too. But on the long side, you know, there are a few of these trades. Sugar looks great. There's no reason to get, you know, short or get ahead of yourself on something like sugar. It's a freight train. It's running away. If you're long, just hold long and call it a day. Yeah, so I mean, that, you know, it ran up right out of 2020. Beautiful trend. Now it's breaking up more to the upside. Came back to that 10-week MA. Now is probably a good chance to add to some of these. Good opportunity. But once again, it's, you know, commodities are very, very cyclical, and we're going to go back and forth and back and forth. And I think right now tech is an easy trade. These long duration trades are easy trades at the moment. And so if we kind of put those together, kind of sit in those at the moment, now we're positioned really well for whatever's coming next. And just be ready, because I do think, you know, the Fed, like normal, will probably get ahead of itself. They'll probably lower rates too soon, something. Then the commodity trades has a chance to pick back up. But at the moment, it's just take a break, look at it, watch it. You know, the dollar could give it a boost too. And just be ready for the next move in this.
All right, Jason Perz is from Against All Odds Research. Find him on Twitter at JasonP138. Jason, thanks a lot for coming on today.
Hey, thanks for having me.
All right, guys, we went long with Jason, which means we're crammed against the clock here. Let's get Kimmy Circle on right now and see what she's watching today.
I'm gonna go heat up my coffee.
What's happening,
What
Kimmy?
is up?
Hi.
Sorry,
Hi.
we kept you
Morning.
waiting. We kept you waiting there.
Good morning. Good morning. Please.
All right. Kimmy, you noted in your note this morning that the last few Fridays have been bullish.
Yes,
What are the tea leaves saying about this morning?
You know, it's a little tough one. You know, I'm a little like, are they going to push it? You know, last Friday was obviously crazy, right? The market just full speed ahead. A lot of Fridays, they like to, you know, I did say this last week that, you know, before a holiday weekend, they'll probably make everyone happy and push the market higher, right? That's what they typically do.
Yep.
You know, let's see today. You know, we're getting a little in the nosebleed. Maybe it pulls in, but they might keep it positive for the day. I don't know if it'll be as crazy as last Friday. That was like, you know, up over 1%, you know, crazy moves. Every name, everything you picked, you threw a dart and it was just going higher. I was like, oh my God. And Fridays, you know, are hard. I don't love trading Fridays, option expiration, and it makes it harder. So it's always like a 50-50 chance. It's just last Friday was like trade after trade went well, you know. Today we'll see. Well, I have to see the way things open. I am looking at names, but you know, I have to see the way they trade. So I can like names, but I don't know if they're going to fade them or not. So sometimes I sit there and like talk to myself in the room, like, you know.
Question in the chat from Nikki. Wonder if Kimmy played that Carvana news.
That was yesterday. So I did mention it in the room above 1390. And I said to people, I said right here, I said, if you're interested in Carvana, right here at 1390, you could play it, give yourself some wiggle room. Like you have to, because it was very volatile, very volatile. And I said, this name has room up to like 1550 and then 16. I said, but please be careful. Give yourself like at least $1. If you want $1.50 stop in it, you know, and that's a lot, but look at the movement in the morning. Yep. And then it went, one guy, I did not trade it, but one gentleman in the room did and was like, thank you very much. So.
And I saw you trade Expedia yesterday.
I did not trade Expedia.
No, I'm sorry. You're watching it today. That's what it was.
I'm watching it today. Yeah. I called it out in the room. It started trigger yesterday around $99 first time. So I'm going to see how it handles this $99 level. Maybe we get a pop to 102. Lame-o, nice. Nikki. Who's Nikki?
I don't know.
I'm going to call him out. Yo, Nikki.
I don't know. Listen, everyone watching on YouTube, Kimmy, you know, when she leaves this show every day, she goes into her live trading room where she is live trading the open through the open and announcing her trades every single day. There's two ways to get into the room if you want. One, you can email us. I'll put the email on the screen right now. It's questions@stockmarketmedia.com, or I'll wait for you to get that down. Or you can call us. Here's our number. It's on the screen, 323-421-7991. We will tell you either by email or by phone how to get into Kimmy's room every day, because that's where she's going right now. Kimmy Sokoloff.
All right. Have a great weekend, guys.
Good luck. You too. You too, Kimmy.
Bye.
All right. I always feel bad because I know she trades the open. I don't want her to stay too close to the open because I know she's got to go. And so anyway, okay.
About 5 minutes. She'll be good. She's ready. She's ready.
Okay. 9:24. I think finally now we have time to do some earnings. And there were a couple of good ones last night. So let's talk about that right now.
First, before we get started, I'm sorry, guys. What makes earnings good? What would make is it a beat? Is it, you know, is it just, you know, off from expectations or estimates?
Hold on. You ask what makes earnings good. I would ask you, what are you expecting, or what is the market?
So then that's what it's all around. It's whether or not the expectation.
Yeah. My definition of good is fun to talk about. So either a nice beat, a big miss, a volatile stock, a company a company that's interesting. That's my definition of good, right?
Okay.
You guys have different goals
Yeah.
for earnings.
Yes, we do. Okay, let's get the calendar up on the screen just so you can see. We'll highlight a few of these right now. Let's start with Lulu. It was a big beat for Lulu last night. I was in a Lulu over the weekend. I had to wait online like a half hour to get into this damn store. Story for another day. Anyway,
What did you buy? No, it's in the story for right now.
Yeah.
What did you buy?
I didn't buy anything.
You were with your wife.
I was with my wife and a couple other people, and I volunteered to wait online so they could go into some other store I didn't want to go in.
Took one for the team.
Right. Anyway,
Because I'm interested in the Lulu man pants. We had some discussion in one of these videos the other day.
the joggers. So yeah, I saw them, but I was not about to pay like $90 for a pair of joggers.
My brother swears by them. I haven't bit the bullet yet, but
Yeah,
he loves
This
them.
is what I'm hearing from people.
yeah.
People love these pants. Ask him what kinds he wears. Anyway, moving on.
Okay. The numbers from last night were excellent. Their Q1 earnings per share, $2.28, blew away the $1.98 estimate. Sales of $2 billion versus $1.92 billion, so they beat that number as well. They gave guidance that was strong. They said their comps rose. Comparable sales rose 13% year over year, which actually declined from the prior year. But the market was expecting that. They said check this out. Sales outside of North America rose 60%, 60% year over year, mostly because of China.
Ex North America.
Yes,
And that's where the growth is for a lot of these companies. That's where they want that's where they want to see their revenues increase, right? A lot of times a company like Lulu, they've been around for 15, 20 years now. They start to kind of saturate their domestic market, and then they have to go overseas and look for that new growth. So that's huge. That's why the stock's probably ripping today.
Yeah, up 15% pre-market.
so a big one.
I like it. Look,
Yeah.
When you look at this chart, right, Ian, like the first thing that comes to my mind is secular leader, right? So I just zoomed all the way out and charted it against the S&P. This thing's been stair-stepping higher on relative terms pretty much for 15 years now. We got a clear level here called 350. You could even draw a little horizontal resistance line at those pivot highs and play it off there. And look, plenty of upside back to north of 540.
That's a great trade.
Sharp contrast to that Foot Locker report from a couple of weeks ago. All right.
You can buy things from Foot Locker online.
Can you? Is that what you said?
Yeah, like, is that a thing?
I
never have, so I can't. I guess I wouldn't know.
If you don't have an online presence, and I know I'm not saying anything new at all,
Right.
it's you're not going to make it, and I think that's Foot Locker's problem.
Sure.
I think you can go directly to the manufacturers and buy your shoes from Nike. I don't know who's buying them from Foot Locker.
And that's the thing. You can go to for any of the major shoe brands. You can go straight to their website, and they're going to have everything.
Yep.
And it's great. I'm a Nike member, and I love it.
All right, let's do Asana here next. This was a good report too. They're still not profitable on an EPS basis. They lost 9 cents a share, but that beat Wall Street's estimates. Their sales beat as well. Their guidance for the quarter and for the year also beat. And the cherry on top of this cake, they also announced Asana Intelligence, an AI platform that's got all the buzzwords in it. So there you go.
Wow. Okay. So what? This is a software stock.
Yep.
Is it enterprise software?
It's workplace management.
Okay. All right. So yeah, everybody's getting into AI. Look, what do I have to say about this one? I got to say there was a huge insider buy by the company founder, who was also, I think, Moskovitz was a co-founder technically of Facebook. So he's got enough money to do this, but the guy came out and bought $350 million worth of stock on the open market, had to set up a private placement just to make the purchase. And I mean, look, what was his cost basis on that? Like 18, right?
Yeah, 18.
Already in the money. These guys know where to buy. That's why we keep these stocks on our list. The base is shaping up, but really, Ian, this is cloud.
I was
right?
just going to say, it looks just like cloud computing, SKYY. Yep.
You could trade it back to the August highs, but really, I want it above 30.
Yeah.
That's where the big trend comes in. Probably still messy between, this low 20s, 30 range.
Yep. 100%.
All right, a couple more here quick as the market just opened. We'll do look at Broadcom here, AVGO. Yeah, Broadcom beat on the top line, beat on the bottom line.
So this is great because it goes back to Ian's question. What is good? Not a beat here, but this company just rallied like 50% the week ahead or 2 weeks ahead of its earnings report. So is it baked in the cake, right? Like, what is the expectation? Obviously, the market knew it was going to be good, but how good were they looking for it? You can only really know now today with the price reaction. So where's it going?
That's a good phrase. Is it baked in the cake? I'm going to steal that.
It looks like it was.
It's up 1% right now. 1.5%. So really muted reaction. Am I seeing that right?
Yeah, it's up 1.5%, around 803.
Yeah. You have extremely quiet overnight session. Wow. Tight range.
These stocks have been resilient. Like we talk about. Do we have an Avago chart to throw?
Yeah, it's up there.
Okay, right. Yeah, you can't see that candle so great, but that was an ugly stick. You could see the big red upper wick there, right? That was an ugly stick. And I was looking at that thing thinking, boy, if we get some downside follow through, this thing could retrace everything. I go back to those former highs. How resilient these things have been. You didn't get, any follow through at all. We were up the next day on Wednesday following that nasty candle from Tuesday. And now we're just tight right here. So this is exactly the kind of price action I'm referring to when I say these stocks have been so resilient. They're ripping, and then on corrective phases, there's barely any give back. And it's nothing short of very bullish.
And the last one here, this is probably the top stock of the morning just in terms of performance, MongoDB. They absolutely blew away the estimates in this report. The estimate for their earnings per share was at 19 cents. The actual 56 cents. Sales 368 versus $347 million. Their guidance was actually probably a bigger beat than the earnings. The Q2 guidance and the full year guidance came in above estimates. Q2 guidance, like they're saying more than double the estimate on the Q2 EPS. So huge.
On the guide.
Yeah, the guide. Sorry, Q2 is the guide.
Yeah, this is a monster beat.
Up 33% this morning.
Wow. Yeah, that's. I mean, just look at where the EPS came in. This is killer. And hey, look at where it gapped right to. Is that any coincidence?
Yep, August. Those August pivot highs.
This stock gapped higher by 34%, like you said, Ian, and then it stopped on a dime at the August highs. Huh. Yep, looks good.
That's the level.
Yeah, it is. I think you could define your risk right there. This thing will probably do something similar to Avago, like we just talked about. Probably get some chop here, and then you could define your risk right there. This thing's going back to all-time highs. Look at momentum, 85. Really incredible. Highest momentum reading of all time? Not quite. Anyway, all right, what's next?
That was it for earnings. I know we had a shit ton more FIC charts, though, so maybe we should go there.
Charts.
Let's do some news first.
Oh, we got a couple news items here. A couple of big tech news items. You want to?
Nikki Booms. I'm more of a Bumble guy. I'm too old for Tinder.
I was on all those apps back in the day. MTCH hasn't done well. Okay, so you want to talk Meta?
Yeah. Let's talk about.
So Meta announced yesterday the latest, their latest foray, whatever you'd call it, into VR. Of course, this is on the heels, or not on the heels. Before Apple is going to announce their VR stuff next week, but Meta was out yesterday with their Meta Quest 3. It's their latest offering in the virtual reality, augmented reality space. It's a 128 gigabyte headset. It's going to be priced at $500. And that was their big announcement that they had unveiled yesterday. So
when did they come out with first generation Oculus?
Oh gosh,
years ago.
A while back.
Yeah. So I wish JC was here for this because he might kill me for this, but he has the first generation Oculus.
Yeah.
It's like boxing on it and stuff. I guess it's cool, but look, these guys aren't really competing with each other, Meta and Apple, with these products. So what What Meta did was they wanted to drop their VR headset ahead of this very hotly anticipated Apple announcement of their first VR headset. It looks like the ticket price on this one is $400. Am I seeing that right? $499?
Yeah, $499. That's correct.
Apple's is going to be priced north of $3,000. So they're really different markets. And I got to say, Apple's probably making the right move here. It sounds like just like they do everything, they're going to do it perfect and 10 times better than anybody else. And they're going to ask to get paid for it. And the people who are, the tech nerds and people who really want this thing, they're going to go and pay up for that because it's super cool, brand new tech. And I don't want the cheap version. I don't know. I think it's still such a small market anyway. As cool as it would be, I would love to play with something like that. I'm sure Apple's making it, 5 times better for a fraction of the cost a few years down the line. So, yeah. Maybe people are talking about maybe they're like the next VCR. We're all going to be walking around with these goggles on our faces. I don't know. Pokemon Go was sick. I mean, right? Yeah. That's what this is.
Basically.
That's what this is. What do they call it? Mixed reality?
Augmented reality. And there was another piece of big tech news. My Thinkorswim is kind of crashing on me, so I can't look at the charts right now. But if you had noticed, Verizon and T-Mobile and AT&T all down this morning because of a report from Bloomberg that Amazon is going to be launching their own wireless plan. That was like an hour and a half ago or overnight that came out. A few minutes ago, an Amazon spokesperson told Reuters that's not true. So
the funny thing about that, Spencer, is Verizon and AT&T are down most mornings. So I can't tell if it's really the news driving it or if that's just what these stocks do.
No, Spencer, I honestly thought you were going to bring up helium. I thought we were going to start talking about mining helium.
Well, here's the thing. If people are constantly trying to disrupt your business, whether it's, the latest junky cryptocurrency like helium or somebody big like Amazon, you're probably doing something seriously wrong, right? Like that's the market telling you these companies are vulnerable if people are coming after them trying to do what they're doing better. And it's only a matter of time before somebody does these. Listen, we've talked about Intel on here. We've talked about companies like Cisco. AT&T and Verizon are very much on the can't buy list for me. Can't buy them. And AI is too.
Wait, so why is AI on the no buy?
It's all hype. It's all hype. There's no business there. That is like such a tiny little business. And we're talking about it like
wait. Just to be clear, you're talking
AI
about the stock? AI, the stock? What are you talking about?
Yeah, C3 AI.
Oh, see? You guys didn't know. He's talking about ticker AI.
Yeah.
Okay. I thought he was talking about the AI broadly speaking.
No.
All right.
You know how I feel about AI. That's not the vehicle. Right? In fact, that's a trap, in my opinion. Because people think it's the vehicle. Great marketing. Terrible business.
We saw a lot of that in early 2021.
Dude, their net income was negative 60 million. Only on 60 million of revenue. So this company is literally spending twice as much as they make. Like it's just a disaster. It's not viable. So
anyway, I was all excited to talk about an Amazon phone plan. I guess that's not going to happen now. But
why not?
What's going on? And go with so Amazon will be your provider?
No, they denied it.
Okay. So Amazon said they're not doing it.
Yeah, they denied it. Bloomberg said they are. Amazon said no, we're not.
I thought Verizon and AT&T came out and said, no, they're not doing that.
No, Amazon said we're not doing that. But there could be a line. We don't know. But general.
And Mark, price is what pays. And that price is back in the box now. Total mess. Yeah.
All right. I do want to give Ian some time to talk some FIC charts ahead of what to FIC today. So let's pull some of those up.
All right.
Let's do it, Ian.
Ian, what do you got for us?
Do the bump.
Just brought a bunch of charts today.
Oh wait, I have to do the bumper. I apologize. I forgot about the bumper we have.
What crap production is this?
It's a Friday. What more do you want on a Friday? Friday of a short week, no less. Okay, where's my bumper?
go. All right.
Before you, everybody on commodities right now, why don't you hit up these questions in the chat? Good morning. What do you think of PPLT Platinum? I think that's just the fund, right?
I do like Platinum, and I really like PPLT. I like the physical ETFs to play Platinum. Mm-hmm. The same with Palladium. I really like PALL. Actually, got to meet Robert Minter last month at the CMT symposium. He helps actually manage and those ETFs. So hopefully we can have him on the show one of these days. He can talk more to those.
I would love it.
But yeah,
that's a great idea.
Palladium and Platinum, they've been surprisingly resilient. I really want to see PPLT. I really want to see Palladium above that 1050 level. It's just below there. It's still messy, but I want to see these metals start to participate, start to catch higher. We saw that a little bit last month and the month before, falling over with precious metals in the past few weeks. But I want to see those metals participate in this next leg higher. I think they will. I think they will.
There's not a more logical level for something like Palladium to start participating at. I mean, there's some serious price memory here, no?
Right. Yeah, and it's retesting the 2020 lows around 1333. The positioning, COT positioning, also points to a potential unwind that that would definitely fuel a rise in price. So yeah, I think these metals look very, very attractive right now. We just need to see them resolve higher. I like Palladium, back above 1500, 1550.
If I told you have to buy one commodity contract for the next month today, sugar's extended, right?
Sugar is extended. I'm not gonna lie, I'm a little short sugar here. Sugar breaking down to fresh month and 6 week lows.
You're a freak because you'll ride these things on the way up and then you'll trade the correction short.
Yes.
Right? I mean, that's what you're doing.
Yes. Yeah. I have I trade multiple time frames, which can be a little maddening at times, but
you don't just take profits, you straight up flip the book.
Oh yeah, I'll flip the book. Yeah, absolutely.
Love it.
In a heartbeat. Which is a really good trait to have, which I didn't have for a really long time. It's just something that I've picked up in the past couple of years, and it's just being able to let go of an idea or an opinion on a market and just follow price. Go with the trend. I think it's a lower for sugar. I don't want to buy sugar here. And the thing is, great example. Jason, different model. Longer time frame, he looks at a chart of sugar and he says, hey, maybe this is a good place to step in and start adding to the long position.
Yeah, right.
Yeah, that's a great question. If I had to buy one contract, it would probably be gold. I would buy gold above, against 1975. I'd buy the gold, the August gold contract.
1975, yeah.
Yeah, right. Keep it tight. I want to keep it tight. It's still messy for precious metals, but I think that's the next area of the commodity space that's really gonna catch higher.
So if that's your trade, right? Then what that tells me is you're looking for another test of the all-time highs in gold. Buying in 1975, you're betting on a move back to at least the pivot highs, which line up at that 2080 level. I mean, that would make for four tests since late 2020. Knocking on the door. I mean, is the fourth time a charm?
Who knows? But the more times the level's tested, the higher the likelihood is it breaks. So, I've just been so impressed by precious metals in general over the past few weeks. How resilient they've been with this last bout of selling pressure. And silver's hanging in there. Neither gold nor silver really pulled back that far. In all honesty, like silver didn't go back and retest the lower bounds of its range. It didn't go back to 2140. I thought it might. Gold really never got back down to 1924, which is that prior commodity super cycle peak from 2011. I thought gold was surely headed to that level. Buyers stepped in well above that level and drove prices higher. So,
I mean, if you just look at these trends in gold and silver since late last year, I mean, these are just standard orderly uptrends, right? I mean, higher highs and higher lows. Sure, if you zoom out far enough, it's still a monster range, but over short and intermediate term time frames, trend is high.
trend is higher. Yeah.
Maybe we finally go. What else is on your mind? What else you want to talk about? You want to talk about uranium? What do you got?
I do like uranium. I like uranium a lot. Like what CCJ was up 8.5%, almost 10% yesterday. At one point intraday, it was up 10%. I think URA, the uranium ETF, closed up around 6% yesterday.
Yep. Yeah, I mean, look, Cameco's up over 12% on the week.
Yeah.
How would you? So, all right. If you want to get involved in something like uranium here, you have options, right? You even have an ETF. CCJ sure looks like the strongest name to me. It definitely looks like the leader. Do you go out and just buy CCJ? Do you try to buy the ETF against these lows? And, what's the vehicle for this?
I prefer CCJ. I prefer to go with the leader, buy the strongest. You always want to buy the strongest and sell the weakest. I really like CCJ above 33, about 32.50, heading back up towards those 07 highs around 55. And you look,
why
we got that.
Why wait?
What's that?
Why wait till 33? Why not buy it right here?
I mean, you could buy it right here and play it really tight against those pivot highs from late last fall.
Yeah.
But you know what? In my experience, and maybe it's just my personality and the way I like to trade, I'd rather wait for confirmation. I'd rather, wait for a breakout above that 33 level than buy against those recent pivot highs while we're still stuck in, a longer term, year-long range. And price, price can continue to chop sideways and absorb overhead supply around 33. So I just don't have I wouldn't say patience. I just don't have the personality to sit on a trade that might be in the red for a while.
I mean, look, no arguments here. This thing has been stuck in this very same range that it's really still in today. Like you said, if you draw a little diagonal trend line there and draw like a huge triangle pattern, yeah, we are taking out the pivot highs, breaking that trend line. But this is the same range we've been in since like September of 2021, going on 3 years. Sorry, 2 years now. So
yeah, and the thing too is like if those pivot highs from last fall were further away than the April highs from 2022. Then I'd be a little more inclined.
Right, but you're not going to lose much of an entry by waiting.
Right, exactly. But yeah, I do like uranium stocks a lot here. And just go with CCJ. Go with the bellwether. It's outperforming, And
they're the industry leader too.
Right.
That's like saying just buy the JP Morgan.
Is there any other bank worth buying?
Yeah, listen, I wouldn't even be buying JP Morgan. Spencer, any regional banks blow up this week? Are we
still doing that? Is that still happening?
We're not. I thought we're past that.
Can we do a debt ceiling update?
All right. The update is we don't have to talk about it anymore for 8 more years. That's the update. The Senate reached a deal overnight. They're going to pass their resolution to halt the ceiling. Sorry, and I do see someone in the chat asking about SoFi. There are implications for SoFi in this debt ceiling deal because as part of the deal, they are going to resume the student loan payment, or they're going to end the moratorium. That's what they're going to do. They're going to end the moratorium on student loans after 3 years now. So places like SoFi that have loans out are going to start getting those loans paid back, and that's probably part of the reason why the stock is doing what it's doing in the last couple of weeks.
Just to be clear, what you're saying is that after 3-year grace period,
yes,
people that agreed to pay back their debt now are being forced to pay back their debt again?
Yes, people that were given the ability to pause their student loan payments during the pandemic, that pause was then extended several times, and that is now going to end. So if you have student loans, federal student loans, that's the key here, right? If you have federal student loans, you're going to have to start repaying those. in the coming months. Not right, not like today, but like in the coming months. So
there are also a million different ways to avoid paying your student loans, whether it's the military, more schooling. You can apply for all these different things. The whole situation's a mess.
Yep. But anyway, debt ceiling, as we all knew it would be, they beat the deadline. So congratulations, I guess, to Congress for fixing a problem that they created. I'm not sure.
Thank you, Congress.
Thank you, Congress, for that. I don't know.
It's so childish. It's so ridiculous. Everyone knew all along that this was going to happen in the final hour and it was going to be just fine. It's really pathetic. It's really pathetic. We go on. The market never crashed. Like Jeff Hirsch was mentioning yesterday, though, if you go back 12 years to 2011 and you look at that analog, the market was absolutely fine leading up to that debt deal that they finally, got done and everything ended up being fine. And then after the news of everything's fine, there's not going to be a crash after all. Then we got like a 20%.
That was interesting. That was interesting. Yep.
We'll see.
Yeah. The one perhaps like the one interesting market implication from all this was when the government announced that the 1 month treasury bonds that were paying like in some annualized rate of like 8% or something.
Yeah.
But of course you don't actually get 8%. But anyway,
junk bonds, Steve. I'm telling you, treasuries are junk bonds.
All right. Let's see. Do we have any questions from the chat? So the question was about SoFi. Yeah, are you bullish SoFi at these levels?
I'm pulling up a chart. Just give me 1 second.
Yep. I'm just going to venture a guess here that most people that own this stock are massively underwater. Just a hunch.
Well, let's check. Right? We can do that math pretty easily.
We can.
Let's drop a good old VWAP on this bad boy and see what's happening here. So I'm gonna drop it. Go all the way back. See, if you look at this SoFi chart, you have like 3 peaks that are almost equal, going back to January of 2021. So it becomes a question of like, where do you want to anchor it from? So I'm going to anchor from the first peak and the last peak. Here's the chart. Let's throw it up now. Be on slide 1. All right. So
there we go.
Got it up there.
Cool.
Throw it up.
Oh, sorry.
Like we discussed, right? So much. Let's get above those August highs. Let's let this base complete before we get involved, right? So you have the August highs that come in right around $8, and also the February highs. We're trading around $7 today, a little under $7. Mm-hmm. I don't know how we opened today. We already have an overbought momentum reading. Momentum looks very promising. Again, this is what Ian was talking about earlier. Momentum has not been oversold for some time now. We've had a handful of overbought readings since second half of last year. You got that 200-day trying to flatten and curl higher. It is still sloped lower. Maybe this one needs more time. So I would say with something like SoFi, this thing's moving in the right direction. It's shaping up like it's going to look like all those other bases that we have been trading. But just be patient. Let it do its thing here. $8. You could buy it on strength. I think you get confirmation to at that first VWAP that's coming in around 950 there. It's like a faded blue line on top there. And then the first VWAP that I dropped in does actually come right in at that base breakout level. Lines right up perfectly with the August and the year-to-date high. Mm-hmm. So confluence of interest, $8 is that level.
I like it. It looks good. It's a constructive base.
Investors are dumping value funds to shovel money into AI bets. Maybe.
Talk to me in a quarter.
Is that a CNBC headline?
Sounds like it. Talk to me in 3 months. Okay. Do you guys want to do some recess here? I feel like Friday recesses are always the best recesses because we have the whole weekend to look forward to and
let's
talk about some stuff. All right. I got to go recess today.
All right, hit me. What do you got, Spencer?
All right. So my birthday was a couple of weeks ago, And my mom asked if there's anything I would like, and I sent her a list of books. I just said, you can get me any one of these books. What did my mom do? She got me all the books on the list. So let me show you what I'm working with here. We got
Nice.
All right, that's one.
That's the best Michael Lewis book of all the Michael Lewis books.
Oh, really?
Love.
Oh, that's high. That's high praise.
Yeah,
all right,
he's great.
we've got Jack Bogle. Enough.
Okay.
All right.
Know how that is.
I will tell you, this is gonna take me a long time to get through all these. We got Just Keep Buying, Nick Majuli.
Yeah.
Which I've heard very good things about. There's only two more, I promise. Josh Brown's book has been on my list for a long time. So there we go. Backstage Wall Street.
Yeah,
Josh Brown.
That's awesome. Shout out to the homies at the compound.
Yep.
Yeah.
JB, Majuli.
Last one, Jason Zweig, Your Money and Your Brain.
Yeah, I like his work.
Solid list, Spencer.
Yeah.
Good luck.
That's my summer reading list right there.
No, that's awesome.
Moms are the best. That's the takeaway here. Moms are the best. Thanks, Mom.
I thought you were going to say, you asked for all these books and she bought you socks.
No, I asked for one book and she wanted me like 5.
Okay. Yeah. Good mom. All right. Solid stuff there.
Yep.
All right. Bullish Spencer's mom. Ian, what do you got? What are you reading? Anything good?
You know what? I just reading short stories these days. I'm trying to read a little bit of fiction here and there. I read the paper every morning, but I'm not really diving through any big novels or anything really technical because running around pretty busy. I'm having a hard time with the 2 kids. I got my oldest just started riding his bike, which is really exciting. So that's probably my weekend. We're going to be riding bikes all over the neighborhood, hitting all the parks. But
all right. So how old is Kean? And do you start with training wheels? How do we do this?
No training wheels. Kean will be 5 next month.
All right. So you got to let him fall on his face a couple times, let him feel it, right?
Right. So you start him really young on a scoot bike that doesn't have any pedals. You take the pedals off. It's a really tiny, lightweight bike. So they scoot for a couple years. So by the time they're 4, they're ready to go.
Oh,
so that's where he is now. It's lots of fun. So
that's cool. When are you going to teach him how to surf, Ian?
He's just starting to swim. So we'll give it another year or so. But I'll have him out there. I'll have him out there for sure.
That's awesome.
Are you going to be going to some games?
Looking into it. I mean, I sent you that thing last night, right? I just think it's so cool. This doesn't happen really often where the NBA and the NHL have the same team from the same city in the finals at the same time. It's also the only 2 major sports that could even happen in, I think.
Right.
Right? Because they overlap like that. Fun fact, Ian, don't steal Spencer's thunder here. As a New Jersey guy, you should know there's 2 examples of times where this did happen in the past. Granted now, no city has ever won both hockey and basketball in the same year, but you should be able to name at least one of 2 situations.
What do I get if I get it right? What do I get?
Well, if you're wrong, you're not a New Jersey native.
All right. So the first one is 2003. I know that because I was there. The Devils and the Nets both made the finals. I went to a couple Stanley Cup Finals games that year. That was
how good was the old Continental Airlines?
It's a shithole. It's awful.
I loved it there. The Meadowlands is so cool.
Yeah.
At a football game.
Yeah, it was convenient to get to. I'll say that, but man, what a dump. And then the time prior to that was in New York in '94. The Knicks and the Rangers and the OJ chase at the same time.
You guys know that old great job, Spencer.
Yeah, you're not getting that past Spencer. Spencer was at ESPN for a while.
All right, so did you guys used to watch that show Stump the Schwab?
Of course.
We could do a segment like that. Could do like a sports trivia for recess. I'm gonna bring more for you.
All right,
got more.
That's fine. Right. No. In all seriousness, though, I am going to start Trivia Fridays once I have my soundboard working.
That show was great. They got to bring that show back. What happened to that guy? He was so good.
He actually got laid off a while back. Cutbacks, man. Cutbacks. Anyway, all right. That's going to be our show for the day. Stay tuned. An hour and a half from now, Ian and I, mostly Ian, on What the Fic, which airs every Wednesday and Friday at 11:30 a.m. Eastern Time. Thanks to our guest today. Thanks, of course, to Kimmy, as she joins us every day. Thanks to John Netto. And thanks to Jason Perz. And thank you, Ian Culley, for guest hosting and stepping in. And I have a feeling we'll see you on this show guest hosting next week as well. Thanks to everyone for watching, whether you watched on Twitter, whether you watched on YouTube. Hey, if you watched on YouTube and you're in the chat, we appreciate that. And drop us a like while you're there. We appreciate that even more. And that's it. It's Friday. Happy Friday. Good luck trading. Enjoy your weekend. We'll see everyone a little bit later here on Stock Market TV.
Have a good weekend, everybody.
Thanks for
Run it. I can't take no loss. I don't even know what it costs.